Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello everyone, checking back in on the dollar and gold. And in all these videos over the past couple of weeks, you've heard me say time and time again where the correlation between the dollar and gold favors gold because gold is stronger and holding up better. Not a directly inverse relationship, but now that has changed, and that's due to market strength, in my opinion. So I've been pointing out how the S&P 500 needs to be watched because market strength is going to lead to weakness in gold. And we had a new all-time high in SPY today, very clear bull break, and that led to downside in gold. And you can see the dollar has not made a bull break. We do have a little higher low, but still lower highs on the hourly time frame. Look at resistance from January 23rd. We hit a high of 163. So we're still well below that level, but you look at gold, gold is well below the support from January 23rd. So we have a lower low on gold. We don't have a higher high on the dollar. And in my opinion, this is directly related to the market strength in the S&P 500 leading to this weakness. So we ended up having a perfect rejection from 1220. And again, we'll look at that support in just a moment, that resistance, I should say, on the daily time frame and where that level comes from. But now we're starting to see a little bit of weakness, and the key level to be interested, in my opinion, is on the daily time frame, and it's this 10-day moving average. So we had a bearish reversal candlestick. The bulls bought the dip and bounced off that support 2 days in a row. We have another bearish reversal candlestick, and here we are. The 10-day moving average is 1206.27. Bulls need to hold that level. If we see tomorrow close below the 10-day moving average, we're going to confirm the bearish reversal candlestick, and we're going to lose that support, and we'll be looking down at 1195.75, the low of the last consolidation, as a key support level. I'm going to put a line there to keep an eye on that low of consolidation. And this resistance line, zoom out. Remember back when that dump was ongoing, we had bear flags and little bounce attempts, and we rejected from resistance levels. One of those rejections was 1220.90. So I put that line there. You zoom in, and we rejected from 89 cents below that level. But clearly, that resistance is coming into play. So a bearish reversal candlestick. Tomorrow's a very important day. The gold and minor bulls want to see the S&P 500 give back those gains. Want to see SPY head back down towards 227. Let's look at these bull miners. See how much pullback we saw today. We did see a push on the shorter term time frames that was a lot stronger than gold was. As we can see here, GDX, look how far above the high of yesterday we got, 23.82. Up to 24.25, so we got 43 cents above the high of yesterday. And you look at gold on the hourly time frame, we didn't get anywhere near the high of yesterday. So very clearly there was a bit of divergence where the miners were still strong, perhaps due to the overall market strength, but either way, it was not correlating with what gold was doing. So we end up forming a bearish reversal candlestick on GDX. A red day tomorrow will confirm it. We're watching the 8-period exponential support, which has held 4 tests. And tomorrow that level is going to be Let's see, it's 23.21, so it's probably going to be in the 23.40s. Update that level at the open. A red day closing below the 8-period exponential moving average support is a big red flag for the short-term bulls. Weekly time frame is rejecting from the 50-week moving average resistance. We've been seeing decreasing bullish volume. That resistance is 24.04, and support on the weekly is down at 22.70. So let's look at GDXJ, and then we'll sum it all up. The GDXJ, we rejected from the 200-day moving average resistance yet again. This now makes 5 rejections from that level at 38.22, unable to get above resistance. Same thing with the 8-period exponential support, still holding. We bounced just above that level today. It's going to be in the low $37 range tomorrow. Update that level at the open. And the weekly time frame, not much to reject from currently, but we're stalling out, forming a little indecision doji, which would favor the bears after the bounce that we've seen. So basically, to sum it all up, watch the 10-day moving average support for gold around 1207. Watch the exponential 8-period daily supports for GDX and GDXJ. And a red day and a close below those levels will confirm the reversal candlesticks on the daily time frame. And if we want to be looking in the opposite direction, if we think the S&P 500 is going to continue strong, we have a bullish reversal candlestick on the highest volume we've seen in a couple of weeks on dust. That has to be confirmed. We have to get over this 8-period exponential resistance. Just like the inverse is holding it as support, it has rejected the price 4 times, and JDST is the same thing. Bullish reversal candlestick, highest volume we've seen in weeks, 8-period exponential moving average resistance. So we know the senior miners compared to the junior miners are more bullish. They have been more bullish on this move. So if we were going to play the inverse, we want to play JDST because they have been weaker. And we can see JDST was green today and dust was not. So there's a little bit of that difference right there. It's all about the 10-day moving average support on gold. And again, if you're playing gold or the miners, you're watching the dollar, gold, individual miner, and if it's leveraged, you want to be watching the unleveraged version, GDX or GDXJ, and finally the market, SPY or SPX. Keep an eye on that relationship. So let's see when the bears took over here on gold. That occurred at 10 a.m. Let's zoom in and get an exact time on when the bears really took over, and that occurred at 10 a.m. on the dot. Let's check on over to SPY. Let's actually just do it right on this chart. And the SPY bulls really started showing up just after that moment. Really 10:15, 10:10, 10:15 is when the bulls showed up. Big move to the upside and just completely inverse to what gold was doing. So that's what we're looking at heading into tomorrow, keeping our eye on the bears for confirmation and keeping our eye on for the bulls for bearish confirmation. And that's that. Thanks for watching. I'll see you tomorrow.